Welcome back to our channel. Today, we've got some exciting stock analysis to share with you all about Bristol-Myers Squibb Company. If you're into investing or just curious about this pharmaceutical giant, you're in for a treat. So, grab your popcorn and let's dive right in. First up, let's talk about the price-to-earnings ratio, or PR. Bristol-Myers Squibb has a TTM PR of 15.58, which is higher than its 5-year average of 10.67. However, the forward PR, which looks ahead, is 7.48, indicating that the company may be undervalued based on future earnings potential. A lower forward PR often suggests the stock might be a bargain. Now, let's check out the PG ratio. It's 10.17 for Bristol-Myers Squibb. The PG ratio is a great way to gauge a stock's value relative to its growth prospects. A PG ratio below 1 is usually considered undervalued, but this is something to keep an eye on. Moving on to profitability, Bristol-Myers Squibb boasts a return on equity of 25% and a return on assets of 8.3%. These figures indicate that the company is efficiently using its assets to generate profits. Earnings per share is a critical metric. Currently, Bristol-Myers Squibb has an EPS of 3.76, but analysts predict a slight improvement with an EPS growth rate of 1.53% over the next 5 years. For income investors, Bristol-Myers Squibb offers a dividend yield of 3.89%. Even more impressive is the fact that they've achieved a 4.93% dividend growth rate over the past 10 years, demonstrating their commitment to rewarding shareholders. Profitability ratios are looking strong with an operating margin of 22% and a profit margin of 17.6%. This tells us that the company is efficiently converting revenue into profits. Now, here's where it gets interesting. Over the last 8 years, Bristol-Myers Squibb has shown positive growth in both revenues and earnings. However, the stock hasn't fully reflected this in its price, with a 5-year total return of only 12% not beating the market. That's something to consider. Debt-wise, Bristol-Myers Squibb has a debt-to-equity ratio of 1.18 and a long-term debt-to-equity ratio of 1.08. While these numbers indicate some level of debt, they're not alarmingly high. Now, for the exciting part. Analysts predict, on average, that BMY's stock price will reach $72.04 in the next 12 months, representing a potential upside of 22.66% from its current price of $58.75. But here's my take. I believe the fair value of Bristol-Myers Squibb should be even higher at $85.26. This suggests a significant undervaluation. So, there you have it, folks. Bristol-Myers Squibb, with its strong financials, dividend history, and promising future prospects, might just be an undervalued gem in the stock market. Remember, always do your own research and consider your investment goals before making any decisions. That's a wrap for today's video. If you enjoyed this in-depth analysis, give us a thumbs up and subscribe for more exciting content. And as always, let us know in the comments what you think about Bristol-Myers Squibb. Until next time, happy investing!